Good afternoon, everyone. Quiet day in the markets here, at least the ones I follow. It's Futures Brizio. It is 12:50 p.m. on Wednesday, March 11th. Hope everybody's doing well, having a great week so far. And just want to jump in here, just a couple of updates, let you know a couple of things, and we'll keep this pretty brief, I think. So, well, let's get into it. For as always, make sure you smash that like button, subscribe to the channel. Any questions, comments, leave them down below. First thing I wanted to just point out is over here on my watch list is my futures list. Is that you might know if you've watched some of my other videos, I've scaled back the number of instruments that I follow now, and I might continue to refine this a little bit. But the issue really is that I want to um, not be so spread thin, especially since I am looking a little bit more at Forex. As I told you, I do have a funded account in Forex, and I do have a small personal account. I'm not really trading the personal account right now because I'm still doing some back testing and using my funded account as my platform to do so, and it's going pretty well. But I'm taking pretty small positions too. But so it's a slow grind. But anyways, I'll talk a little bit more about that. But as far as futures go, you can see here I eliminated rice, soybean meal, and soybean oil from my grains. So that's those three. And on the currency futures, I eliminated the euro, which is 6E. On my broker or in here in TradingView, that's the symbol is 6E for euro FX futures. And the reason why is 6E and 6B, which is the British pound, are virtually identical. Just like if you looked at a pound US dollar Forex chart and a euro US dollar Forex chart, if you overlaid them on top of each other, you find they move almost exactly the same. Okay, obviously slight differences because you're going against one's against the euro, one's against the pound, but essentially they're exactly the same. And so, just for sake of benefit, I just flipped a coin. I just picked the British pound. I could easily do euro. Um, and the other thing I wanted to point out is that, at least from my analysis, the way because since I'm trading a combination of FX futures and spot forex, is that if I see a setup on the British pound futures, let's say I see a short, and you can see, oh, this is the Canadian dollar. Let's go to this one. I'm actually in a short here on the British pound futures, which you can see is in a little bit of drawdown. The market is very quiet today. This is a 4-hour chart. It's essentially done nothing really since the London Open today. Um, and it's a little bit of a risky trade because we do have a higher low that was put in right here. And so this, eventually could turn. But, on this 4-hour chart, we do still have kind of market structure sitting here. In my opinion, this is major structure. So we'll see if I end up holding these or not. But that's besides the point. So, but what I was getting at is if there is a short on the British pound futures, let's say, then that short also will be on the pound USD forex pair. If there's a long, vice versa on this, then there'll be a long on the pound USD. It's the same thing with the Australian dollar. That's 6A. If there's a short here, there'll be a short on the Aussie USD and vice versa for longs. Swiss franc, um, again, so on the Swiss franc forex pair, it goes USD/Swiss franc. So a short on the Swiss franc futures would be a long on the US Swiss forex pair and vice versa. So that one's inversely correlated. Same thing for the yen. Okay, so a short on the yen futures would be a long on the US dollar yen. And on the Canadian dollar, again, also inverted because the forex pair goes US dollar CAD. And so a short in the Canadian dollar futures would be a long on USD CAD. And just to show you that, I'm going to add the British pound futures to this price, to this chart. Okay. And it automatically defaults to a line chart. So I'm going to change it to candles. All right, got to change this to candles because it's showing, it defaults to line chart. We'll do hollow candles. It doesn't matter. Now you can see it's overlaid on top of the, so this, the main chart, underlying chart is the pound futures. And I just overlaid GBP USD on top of it. Now, for all practical purposes, if I didn't tell you that, you would say this is showing the same market. Now the candles look weird because they're different colors, but you can see it is almost identical. Okay. Almost identical. You really cannot tell the difference. And so, of course, that can be a double edged sword too. So, for me as a trader in both markets, if I say, well, I'm going to short the pound futures and then I go over to my Forex account and I short the pound USD, if I'm right, then I win on both. But if I lose on both. But they're two different markets, they're two different accounts. So, it's not really doubling your risk because I'm not taking it on the same account, but in a way it is. Okay. So, I just wanted to kind of point that out. Okay. And now I got to figure out a way to get rid of this. Okay. Because I overlaid them with the same price scale. So, well, anyways, we'll just leave it for now. Okay. So here is, all right, let me get rid of this. So now this is, this is the Swiss franc. Okay. This is the Swiss franc um, futures. So if I go to USD Swiss, okay, and again, let me put this to candlesticks. So now I've overlaid this, these red and green candles is the US dollar Swiss Forex spot pair. This is the Swiss franc futures. What did I say? They're opposite. If you look at these charts, they are opposite of each other. Okay. So again, if there's say a long, you take this spot right here, right? The long on the US dollar Swiss right here is a short on the Swiss currency futures. Okay. And where they're sideways, or here we're going down, this is going up, this is going down, this is going up. Okay, so it's a mirror. This is essentially an inverted image. Okay, so I wanted to point that out, which is part of the reason why I've kind of, another reason why I've scaled this down, because um, I'm basically using these to also confirm Forex trades too. So if I'm seeing what I think is a good setup on here and I take it, I will go over to my Forex account and I will probably take the same trade. Now, in this case, it would be the opposite direction because it's Swiss franc. But again, you get the point. So, and you can do that with the, you know, again, with any of these five, 1, 2, 3, 4, 5. Yeah. So with the pound, the Aussie, because the dollar is so closely tied to all these currencies that you know, that's why the mirror image or the inverted image is so close. Okay. So I've knocked off, like I said, the euro off of this list, which I could put it back, but again, they're almost identical. So if there's a trade in one, there's a trade in another one. There's really no point taking both, because that, then you're doubling your risk. Because if you take a short in the British pound futures and the euro futures and you're wrong, chances are they're both going to go against you and you'll have two losses instead of one. Okay. Now I might still have two losses again if I also took a short on the pound USD Forex pair, but the risk is different over there. I gauge my risk differently. Um, Here in the futures market, I can't really risk it. I can't really scale my risk other than just taking, you know, one contract, because there's no like mini version of this. You know, it's just British pound futures. So theoretically, my risk on any one trade here, dollar risk, is going to be higher here than it would be because I'm in Forex, because in Forex, I can scale by lot size. I can, you know, that's the nice thing about Forex. You can really pinpoint your risk based on your, you know, your account size and what you're willing to risk for dollar amounts, because you can go anywhere from, you know, zero point zero 0.01 lots in any combination and any calculation in between. So that is one nice thing about Forex, about position sizing, that you can't necessarily do in the futures market. Okay. So I did want to point that out. And that's why, and it actually just makes my analysis a little quicker and easier. by knocking off 4 additional markets, it's that much less time. Um, Again, as far as time frame goes, again, I run generally between about the 10 hour up to the daily chart for overall direction, and then 4 hour um for kind of a little bit more fine tuning. And I said I will go to like 1 hour charts for to really fine tune an entry or an exit or stop losses, especially stop losses. I will drop to shorter time frames, usually no lower than the hourly chart, and that's where I'll look. So my range of trading in here is anywhere from the 1 hour up to the daily. But again, it's just the bigger overall look on the uh, 10, 12-hour daily chart. What's the overall direction? Are we coming into any major support or resistance areas on the long time frame? Then down to the 4 hour chart for kind of that intraday look to see maybe whether something might be setting up, and then a little bit of fine tuning on entries, exits, stop losses, and even take profit a little bit off the 1 hour chart. Okay, so it's basically about 3 time frames I'm using, which is that multi time frame analysis everybody talks about. Okay. But generally, I'm looking around the 4 hour to start. And that's kind of where I'm gauging. So if we look at, again, this Swiss franc futures, you can pretty easily identify, we're kind of in a downtrend here. To me, this is like market structure right here. Last time price ran up here, came down, made a new low. To me, this all looks pretty corrective right now. Okay. So I would anticipate that as long as price stays under this level, that we're still in a downturn. Now, that doesn't mean it's going to go down from here. I'm not in a trade on this. This could very well turn and keep going higher. But, for me, it would have to kind of breach this zone up here and start going higher before I would consider, the downtrend to be over. Okay. And so that's the way I look at this. And the 4 hour is a good in between time frame. You can see this is very impulsive coming out of big candles coming out of this. So the sellers definitely were in control and sold up here. So this is definitely a very important level up here that would have to be breached. But again, it doesn't mean this is the continuation of the downtrend, though it very well could be. Um, but I'm not in this trade anyways. But I just wanted to point that out. Okay, so those are the markets I'm trading now. In terms of what I have open, so I'm in this corn trade here long, which it was a little bit better than this. I'm probably going to just close this and just wait for overnight and tomorrow's action. I still think corn overall is bullish. If we look at the commitment of traders, and I know I haven't talked about that in a while, but that's down here. Commitment of traders, this is the large speculators are definitely in this net long position. They don't show any sign of backing off on this. So I think overall corn still has upside potential to go. And, if you want to look at technical levels here on the weekly chart, you can see, there's a level that's up around this 496 area. And that's still pretty far away from where we are now. So whether I hold this or not, I'm not sure, but you can see it's in a very small profit. But overall, it's pretty quiet. Um, I'm not in wheat or in soybeans. Okay, wheat overall, just for a quick look, again, this is kind of the market structure level I'm looking at. This is whether I'm on the long or short time frames. We have this level way down here, led up to this new high. If we look at commitment of traders here, we are still in the net long position here. It is bending down, but that doesn't mean it's going to, start selling off. But it might. Um, like I said, the issue with these COT reports is they only come out once a week, so a lot can happen in the market before you get an update. But we'll see next week. But in the meantime, you just kind of look at market structure and say, what are we doing here? And, this is still overall a bullish market, but we definitely see some bearish momentum. We had this kind of move down. We've tried to come up again, and now it looks like we're trying to go lower again. So, but, overall, unless the COT changes direction and we break lower out of that long area, or we take out this market structure, then I'm still bullish, but I'm kind of neutral on this right now. I did have an alert set above price here in case it started rallying again. I probably would have thought about a long, but it never got there and never triggered, so that's perfectly fine. And if anything, this may just continue down now. All right, corn we already talked about, and soybeans. I just didn't take it because this entry actually came yesterday during the London session when I wasn't in the market, and so because I was still in bed. So if this does go up and make a new high, this will become our new swing. But currently, there's not really anything there for me to do. We're coming up to a recent high here on the 4 hour, so I do expect to see a pullback here. And again, from a COT standpoint, still well in the heavy long position here. Don't see that changing. We do have this weekly swing high that price is approaching, and there was a big sell off in this area before. So I do expect price will come up here a little further, basically to around this level, somewhere up here. If we go to the 4 hour, you can see it, that line overhead right here. So I do expect this will run up a little bit more. So I might still consider taking a long position if I get a good pullback. But my take profit probably would be sitting up here, or at least my trade management would be sitting here because that weekly level is pretty strong. So, um, okay, so that's it for those. And then again, in British pound futures, um, I'm in drawdown on this. This could easily turn against me and go higher. Again, we did put in this higher low right here. If we go out to a longer time frame, this is the daily chart. Um, there is this little pullback area and this big bullish candle. Price kind of tapped into this. So all you kind of fair value gap traders, this could be what would classify as a fair value gap, and we could turn and go higher here. This higher low right here was a bit of a concern. So I may just end up just closing this and taking my loss because there's just no bullish momentum to the downside here currently in this market. But just because it put in a higher low doesn't mean price is going higher. Sometimes you get these false moves right here, this kind of these ABC corrective patterns. But I really, when it finally does turn, you really like to see strong, in this case, bearish sentiment moving down, and we don't have that right now. I'm not in anything uh, on the Australian dollar, which is still pretty bullish. Here's our market structure level, basically off the longer time frame, the 4 hour to the daily. So pullbacks in here would still be, to me, valid for long positions, which again would be also a long position against the Aussie US dollar. Um, the Swiss franc, again, we already talked about this one, but this is kind of the invert, or actually similar to the British pound. We have this market structure level. We'll see what happens with this. Japanese yen continues to make new lows. Looks like we probably will make a new low here. So if we draw this, it'll become our new market structure on the 4 hour. Taking a little peek out in on the market here. We do have an old low back here on the weekly chart that was made back in July of 2024. So this probably will have some sort of reaction off this area. Again, doesn't mean it's not gonna bust right through there because that's old, and I'm not sure how much year and a half old price levels matter anymore. I really, it's not recent. It's a year and a half ago. So more than a year and a half ago. So we'll see. But this is still making very nice lows. So again, any like move down on this is along in the US dollar yen. And again, if I added US dollar yen onto this, you would see it was exactly mirror opposite. Okay. And Canadian dollar. So it's kind of like the pound, right? I took a short on this because it looked like we were going to try to start moving lower. It looked like oil prices had stabilized, which is a huge driver for the Canadian dollar. That's why we saw this big run up because of hostilities in Iran. Since this, started, we've seen the Canadian dollar move up because oil prices had moved up. That seems to have stabilized. So now we're kind of moving sideways. So I felt it was a good point to take a short position here, but that may turn out to not be a good decision either. So look, I show you guys the good and the bad, right? So, and that's what we do here. So, all right, over to Forex. I just wanted to show you on Forex really quick. what I'm doing because I've mentioned this in a couple of videos. So I have this indicator. I move my picture out of the way. I have this indicator on here, which I had coded. It's basically a twist on an existing indicator that is free in TradingView, Currency Strength Index. I took that. It's an open source indicator, free indicator, and I gave it to somebody who does some coding for me in TradingView that knows how to use Pine Editor and is really good with that stuff. Um, and I said, listen, here's what I want to do with this. And so he created this. And basically, what it does is it's, in this case, I have it set for a 7-day look back. Okay. It's a 7-day look back, and I can change this to whatever I want. But using the 4-hour time frame, 7 seems to be a pretty good number. You can make it longer, but again, it slows the indicator down and it can deliver some late entries. But I do play around with it. But right now, it's just defaulted to 7. And basically, what it does is it looks at the currency strength of these two currencies. Now, this yellow line, and I'll make it a little bigger. This yellow line is always the first currency in the pair. So in this case, this is the CAD Swiss I'm looking at. So this gold, yellowish, orange line, whatever you call this color, is the CAD, and this is the Swiss in this aqua blue. Okay, and basically, anytime um, I see these things cross over, like right here, okay, that's a potential trade. Okay, it's just because what you're doing with Forex pairs, the best trades are always diverging strength. So when one is strong and one is weak, those make the best trades where the most volatility can come in, the most movement in the shortest amount of time. Now you can also have one strong or weak and the other one neutral, and you'll still get movement. So if you have one, weak, one neutral, that pair probably still will go down. If the first currency is weak, the second one is neutral, you probably still will get selling, but just not as much as if the first one, the lead currency is weak and the second one is strong. Then think of like two magnets. If you put two magnets together, they kind of repel off of each other. Okay. Those make the best trades. Okay. So this is a very simple indicator. Now, I don't trade these signals in a vacuum. If you just trade every time you see a crossover here, you're likely going to have a lot of losses. I do use market structure, and I'm looking for trade continuations. Now, I will also go to a higher time frame. I wouldn't use this indicator on anything lower than a 4-hour because it would just generate way too many signals, especially with a 7-day look back. Um, maybe if I slowed it down, I could use it on a shorter time frame, but I just don't want to be looking at charts that much. Um, but I could also go up to a 12-hour chart or a daily or a 10-hour, somewhere up in these higher time frames, and you can look for other signals where you're going to get a lot fewer of them, but they'll be generally better signals. And like right here, we had in this case, the Swiss franc fall down, and at the same time the Canadian dollar going up. So here's that crossover. This was back on around March 1st, and here was that candle that led to that, and then we had this huge run up here. Okay, so currently on this 12-hour chart, there's no trade here. They're both kind of like just not really apart from each other, but you can go and I can back test this. Here's another run right here where it's just the opposite, right? The Canadian dollar, they came together. The Canadian dollar started selling down. Swiss franc went up. So what happens? The currency pair has a huge drop from right here, right after that crossover. So again, you can use the longer time frame, but you just get fewer signals. So anywhere the 4-hour to the 12-hour to daily chart is where I look. And I can very easily, because I'm using this as my first look, it's not my only look because I am looking at price action too. But this is my first look. Is there anything going on? I go back to the 4-hour, and I can just very quickly scan through these things. Or something like this, where we see the dollar Canadian. This is the 4-hour chart, where the two lines are kind of moving upward together. To me, this is no trade right here. There was a little crossover right here, but even when it crossed over, um, really the next candle really kind of showed that these two were moving together. And so again, here you have essentially two stronger currencies. And what happens is the market just kind of moves sideways. Okay. And so I can just like go through all these and see that. Here's a nice one where this is the Euro USD. okay, where you see they come together, and then we have this big divergence right here, right, where the US dollar strengthens, the euro goes down, and so we have this sell off right here that's essentially still going on, okay? And you can just like go right down the line with these. Here's the euro yen. Again, they're both kind of moving together, so not really much there. Now, if all of a sudden now the yen starts to bend upwards and this euro keeps moving down, that would be a nice short on the euro yen, but we don't have that right now. And as we saw on the futures chart, the yen is still weakening, which is kind of being shown right here. All right. I'm just trying to pick a couple of random pairs. Here's one right here on the Aussie Swiss. This obviously is in the past, but you can see right here we had this crossover right now, slicing down Swiss franc, slicing up Aussie dollar right here. Okay, crossover. And then look at this rally that ensued. Okay. So the more violent these two crossovers are, the better. All right. You really want for these signals to be good, you really want that super divergent price action. Now, in this case, it'd also be good if it was in the direction of the trend. We did have this move up, right? Strong bullish action came back, put in this lower high, and then the buyer stepped in, which caused this. And then, we had this hockey stick move to the upside. Okay. So this is like a classic one right here. They're not always that clean. All right. Here's one right here. Kind of the same thing, right? This is kind of what kicked off this uptrend, right? Swiss franc kind of knifing down the Aussie dollar. Took a little bit of time here. We had one, bearish candle, but pretty much on the next candle, we had this strong rally up. Now you could have like still been holding this trade from back here with a stop loss here. This would have actually been a second entry right here on this second crossover. Okay. Now you're going to get these interim crossovers like this one, right? Where the prices, it goes the other way, right? We have the Aussie dollar slicing down and the Swiss franc going up. And the price did go down. I mean, we get this crossover. We did go basically after the crossover from about this candle right here down to here. That's not a bad trade. It's a 4-hour chart. This lasted from March 4th and bottomed out on March 8th. So you could have held this. That was a weekend in between. So it's basically about, a 2 or 3 day hold on this trade. It's a counter trend trade. So would I have taken that? Yeah, maybe. I mean, the crossover candle wasn't very impressive. It was this little one right here, but after the crossover. But that's what I'm saying. So you have to use a little bit of discretion with this. You can't just follow these signals blindly. But that's essentially what I do every morning. I look, around the 4-hour chart. If I don't have a lot of time and I don't think I'll be able to really manage trades, if I'm going to be away from my charts for like a day or more, I may skip the short time frames, go to the 12-hour, and I'll just look for crossovers there. I'm going to get a lot fewer of those signals, but when I get one, I know I'm probably going to be able to hold it for, a couple of days at least, and that's fine. So you have to do this based on how much time you have to look at charts and manage trades, and really, how much you're actually just looking to trade, and how much time, like I said, how much time you can spend. But this is very simple, currency strength index. And so again, that's my first look. And then if I see something potentially setting up, then I will go and look at the price action. I'll do all my top down, what's the overall trend. So it gives me a little bit more surety, nothing sure, but a little bit more confirmation that could be a good trade. And I also will, go over to my futures. And, in this case, I'll look at the Aussie and the Swiss futures and say, does that confirm it? Is the Aussie futures, in a bullish trend? Is the Swiss futures in a bearish trend, which they are right now? And so even though those are futures markets and these are spot Forex, they still move pretty much the same together. So I can use my futures charts to kind of confirm these spot Forex charts, in addition to using this currency index, which separates out the two currencies and shows you their strength or weakness individually, instead of just looking at the pair and just kind of guessing, what it's going to do next. So I've had a pretty good luck with that. I'm using this really exclusively on my Forex funded account. Like I said, I do have a personal Forex account, which I'm not really using right now. Um, once I kind of fine tune how I want to use this and what time frame I want to kind of standardize on for this, whether it's the 4 hour or the higher time frame, I still really haven't decided yet. Then at that point, I'll start taking some risk on my futures on my personal account. But right now, I just take small positions on my funded account, and I'm happy with that. Using it as a little bit of experimentation. None of the trades I take have enough risk where they would risk blowing up my account, even if they all went against me. So I'm very careful how I manage risk on my funded account. Anyone that has a funded account, that's the number one thing you are is a risk manager because of their rules. You don't want to blow any of that stuff. So, all right. So yeah, so I want to point this out. I'm going to kind of wrap things up. We're on a half an hour here, but I know I've been talking about pointing out how I'm currently trading forex, and this is how I'm doing it. Using this currency strength indicator, but never in a vacuum, never just taking signals blindly. I'm looking for real obvious, strong diverging currencies where one slices through the other, or if they at least come together and then kind of repel off of each other, those are good trades too. And then looking at the price action to make sure that it kind of confirms that, and also looking at higher time frames and maybe taking a peek at my currency futures to see if they're also confirming what I'm seeing in the spot market. So, but it's really very, very quick. I can run through all these currency pairs in about 5 minutes, regardless of what time frame I pick. Because if I don't see that crossover, I don't see something setting up, I just move on. And I keep a list of ones that are maybe going to happen. Maybe these two start like coming back towards each other. One's starting to angle down, the other one's starting to angle up pretty sharp. That's not a trade, but I'll put it on a watch list. Say, hey, that's one I want to keep an eye on to see if that continues. But I can look through this list in about 5 minutes, know whether I'm going to have any potential setups in that session or that day, even especially if on a high time frame. And that's it. And I just keep my list. I manage the ones I have open, and that's it. And then so I can dedicate a little bit more time to futures, and even that with futures, since I'm only trading, these 8 markets now. Um, that's really all I need. Um, so yeah, so I'm going to leave it there. Questions or comments, leave them down below. Smash that like button, subscribe to the channel, and we'll talk to you all soon. Be back hopefully tomorrow with an update. Overall, pretty quiet day today, at least in the markets I'm trading. Not really much going on. Things are just kind of moving, chopping around sideways, which is not great for trend traders like me, but we'll hope for a little pickup in volatility tomorrow. All right, guys, have a good rest of the day, and we'll talk to you soon.